What's good? What's good? I have a little strategy that I just want to backtest and just show what I'm doing. Um, Essentially, this is a strategy that was inspired by my dad because he had a theory that the Globex high and low both don't break on a single day, and that's true. So I ran statistics on it that the Globex, which is from the market closed at 1600 my time is Central Standard Time. It opens at 1730, the futures market, all right? And we're talking about at ES. So from here, from 1730 to 8:30 in the morning, which is the market open, technically day session open, um, that entire area is the Globex range. The Globex range has a high and it has a low. And statistically speaking, about 77% of the time, only one side is broken, not both. So you have a very high likelihood that if the bottom side breaks, you can have your stop at the high and you're, 75% or whatever, 77% of the time over the 200 plus samples that I have, 240 samples, you have a very good likelihood that you're not going to get stopped out here during the day. Now, I'm not saying how far away it can go. I'm not saying it'll rip. It could range around and not do anything. You can be in negative the whole time if you wanted. I don't know. But I'm just saying that it probably won't break that high if it breaks the low. Same thing, vice versa. So it's a long and short strategy. This is more nuanced because where do you place your entry, right? You could just take Globex range breakout. It's not that hard. You could. But I dove in a little bit more to the statistics, and we have another range to look at, and that's the pre-market high and low. Pre-market that my dad and I at least, deem, we define the pre-market as 7 a.m. till 8:30. So from this range to 8:30, this tight range, I'll show the box here. This is the pre-market session. That's the pre-market session. The darker rectangle. That's the pre-market session. Now, I figured out that if the pre-market session, right? It happens to be also the the Globex low because the pre-market is encased inside the Globex session. That's true. But we know that most of the time after a Globex low is broken or a Globex high, a Globex low is broken, most of the time, about more than 95% of the time, it comes up and breaks the pre-market near. Pre-market near, pre-market far. Look at this is the pre-market range, pre-market near. After it breaks low, the nearest one is the pre-market low. So I used pre-market low. On the top side, it's the pre-market high. So it will pierce that pre-market low. But after it pierces that pre-market low, 50% of the time, it will break the pre-market high. So that's a coin toss. That's literally a coin. So flip your penny. Oh, heads. Okay, it didn't break. Okay, but even if it does, okay. Oh, it's tails. It broke the pre-market high. Now it's here. Now price is right here in the middle. Now what? Well, there's another 50% hoop that the market has to jump through to break the Globex high. So at this point, after breaking the pre-market high, there is a 50% chance, and it was 51% and 45%. So very similar. And I think there's enough noise in the data altogether that you can just round it to 50-50. But it's not an exact science. I mean, we are pretty much sciencing this shit, but we're not saying that this thing is like fucking measurable like a chemical in a beaker. It's just not. There's more noise in this data. Anyways, so if it breaks this pre-market high, so it broke the low, Globex low, comes up, it pierces the pre-market near, which is understandable. 95% of the time it does. Well, but there's only a 50% chance after that happens if it breaks that pre-market high. Boom, it breaks the pre-market high. It happens to. Now what? Well, now there's another 50% chance. So you have to flip a coin twice, and it has to be tails twice. That's 0.5 times 0.5, a probability of 25% that after breaking this pre-market near, that it will actually break the Globex high. That's where I put my stop loss right here at the Globex high. I put my stop loss, and essentially you have two coin tosses defending you. You have a 75% chance that it will not break the next day. That means throughout this day, I don't know what will happen. It might go far in your favor. It might not, whatever. But during that day, you have an opportunity. You have an opportunity to be short. And that's exactly what happened here today, or this day. And it dropped. And there's plenty of times it loses. I'm just saying this is just a prime example of what happened. So where do I get in? Where's my entry? Well, my entry is pre-market low, pre-market high. So pre-market near, pre-market far. And I'm at 25%. I could just get at the Globex, the pre-market low. I could. You can do that. I mean, I could do that, but I'm just going to do 25% of between the pre-market high and the pre-market low, because there's a 50-50 chance. I don't know. I mean, I'm just thinking if it breaks the pre-market near, it goes a little bit further, and that's the highest entry that I can get a hold of. I'm not certain that's going to be correct. I could optimize that, but at this point, that's just what I'm going to do. Because just to get the trade is the Globex breakout. That's the trade. Oh, it breaks the Globex low. I'm short. My stop at the Globex high. You got a 77% chance of it not breaking you out, not stopping you out. 77% chance. Okay, so that's the trade. I'm just nuancing it just to get a little bit of a better deal. I know that 95% of the time, the pre-market near is going to be broken. So there's no way I'm putting my entry below the pre-market near. Not going to do that. So I'm not going to put it at it. I mean, I could, but I just figured, all right, a little bit more than that. So it's really not much of a difference in the strategy. The pre-market near and far. So let's just do one example, another example. I haven't done another example. This one's an end of day exit. That means all day. Yeah, let's just do this one. End of day exit. So that means end of day, it goes all the way 1500. That's where my statistics end. My statistics end at the next day, which is till 1600. But I'm not getting out because intraday margin, this is a day trade. 1500 or 1450 is actually when I get out. Doesn't make a difference in the strategy. Well, at least I don't think. I mean, if you don't hit targets by then, the day's fizzling out. I don't know. I mean, just get out of it. It's better safe than sorry. I don't want to be past 3 p.m. Anyways, let's just do this example quick. So 8:30. Let's do the pre-market range from 8:30 to 7:30. There we go. So 7 to 8:30. Here's the pre-market range. This is the pre-market range. Now let's see the Globex range. Okay, Globex range is 1730 right here. So right this low along with the pre-market high. Another one, it's lined up the same. So Globex low, pre-market low, Globex high, and pre-market high. Now 8:30 kicks off. Boom. This is the 8:30 bar. This little green one right here breaks the Globex high. That means we set entries at 25% between the pre-market high and the pre-market low, which is about 25% near side. So it's about there. It's about where we entered. So that's the algorithm's doing the correct thing. So we enter our stop. Again, it's a 50-50 chance that it'll break this pre-market low. Another 50-50 chance that it'll break this Globex low. This happens to be very close together. I don't care, because guess what? It didn't break. And that's another statistic that 77% of the time it does not break. So this time it did not go profitable. I mean, it didn't go profitable very much. This is a big move right here. Maybe I should have gotten out on that kind of, you know what I'm saying? But I don't know where I'm going to put my targets. And I was hoping to do that in this video quick. So basically you get the point of the strategy. Now I'm going to do some optimizations. Here's the results. Risking $5,000 a trade. As you can see, it's very poor. And I just want to see how many end of day exits there are. Stop loss, stop loss, stop loss, stop loss, target, target, stop loss, target, stop. End of day exit, stop loss, end of day exit, end of day exit, end of day, target, stop, stop, end of day, target, 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 target. Wow, that's a lot of targets. That's $5,000 each. And it trades every single day. Once a day, every day. End of day exit, stop loss, stop loss. So there's a few end of day exits. I want to limit that. So that means if there's so many end of day exits, that means that my target's too far away. That means it goes so far and it doesn't go to my target. You know, it doesn't get there. Sometimes it does, but oftentimes it does not. And I don't know when it's going to push far or not. So I'd rather be safe than sorry. So what I'm going to do is just change the risk reward here. The risk reward right now is a 1-to-1. I'm going to risk 1. Let's say it's $5,000 risk per trade. So I'm going to risk $5,000 and I want to make $2,000. What is that? What's 2 of 5? 40%? 0.4. So 40% of my risk is my reward. Let's check the results out now. I reckon we're going to hit targets a lot more. So let's see this example. The risk is from here all the way to this Globex low. Now this multiplied here, this is the one risk. I just need to get up 40%. This has gone more than 40%, but it didn't rally until after my end of day exit. My end of day exit's at 1450. So it never got 40% upwards. 40% of the risk reward is up to here. And remember, I don't take entry until it chooses a side. I don't buy here before it breaks the Globex high. It has to break the Globex high before I come down and break it or go long. So this one, another end of day exit. Let's see how many end of day exits there are now. There's still a few. Still a few. Still a lot of them. How many trades are there? There's about 73 trades. There's still a few end of day exits. I don't like that. No, I don't like that. I think we're going to have to, maybe we can change the risk reward again. But let's check the results. Performance summary is horrible. I mean, it's consistently not profitable. You flip this on its head, it's a great strategy. So what's the problem here? The problem is this massive risk. I don't think it's a coding error. You can change the risk reward to 0.25 if you want, if that's going to change anything. Or 0.2. I don't know if we should do risk reward. It should be based on the range perhaps, but I don't think I want to do anything different than a 0.25, and that's what basically we were doing there. So something, I don't know. I mean, you can do 0.10, and that's really easy. 15%. I mean, this is just so small. I mean, what do you have to win so many times to be profitable. It's crazy. This should be percent profitable 90%. 90% should be profitable. Almost 90%. Such a small target. You should be hitting it all the time. Let's see what happens. And again, it's not profitable. What the hell is that? Let's take a look at profitability. 82%. So we win 82% of the time. But when you lose, you'll lose. You lose massive. There's 73 trades, about equally split between highs and longs and shorts. The long trades are just eating me alive. I just don't. Oops. I'm not actually certain. It is doing what it needs to do. It is doing what it needs to do. Let's take a look at how much we're losing per trade. I just want to make sure we're losing $5,000 a trade. Profit loss. All my losses on this left-hand column. Okay. 42 grand. That's why it's losing, bro. There's this massive loss. That's not okay. December 20th. Something happened there. You're supposed to be losing $5,000 each loss, unless it's end of day. December 20th. Was this a Christmas bullshit? I don't know. December 20th. What happened December 20th? So this is a blip in the system. This is not indicative of the actual trade result. What's going on December 20th? But these are the things that we have to pay attention to, because if we massage these things out, you won't have it in the live setting. December 20th. So what happened? Here it is. This is December 20th. Just straight red. I see that, but where's your stop loss? All right. Okay. So it's a 1 minute bar. 1 minute bar on December 20th. Let's take a look at that. Because I have only 1 minute bars here. So let's take a look at December 20th. I'm guessing it just freaking nosedived. It did. But we have 1 minute bar increments. So let's say 8:30. What's going on here? This is December 20th, no? This is December 20th, way down here. All right. Not to confuse, but 1400 we met entry. 1400 we met entry. Okay. So you have plenty of 1 minute bars. I have 1 minute bar increments. That means if something is past the stop loss, you should get out. I don't get why it would get out way at the low here. That doesn't make sense. So if I change this to tick, I don't want to, but if I change this to look inside each tick, we're going to be looking at a lot of ticks. And it's so much computation. So let's see here. 37.25 I got out. 37.25, 37.25, which is right here. Oh, at the low? Oh, I got out literally at the low. Yeah, right. They got this messed up, bro. Big time messed up. So it obviously wasn't thinking intra-tick. It wasn't thinking look inside bar back testing. I don't know why that's the case. But again, you've got to have this on as 1 minute 1 minute bars. You can get out 1 minute late. That's fine. But not at the low. That's how many minutes late? Way too many minutes late. So this is important. This is extremely important, actually. I don't know why 12:20 would be that way. Let's take a look. Here it is. There it is. So what's the deal? So why is that correct now? I didn't change the code. I didn't change anything else. The thing is that TradeStation, if you put the intra-tick or second or minute, whatever intra-bar resolution you want, you do it, it might not load all the way back. There might be a symbol on the left-hand side that says, oh, pending data. Wait, and then apply it on and off again. So now it works. So huge mistake there. But anyways, this loss on 12:20 should account about $5,000 because I put my loss material as my loss is $5,000 risk per trade. Here's December 20th. December 20th, loss of $4,950. We're on point. Everything's on point. Now we can actually look at the results. Now that we got that out of the way. For some reason, the back testing wasn't, the resolution wasn't correct. Now we're pretty certain that the code is definitely not a miss. The code's good. I don't know. I don't think I need to go through another example. I went through a short. I went through a long. And I've been doing this beforehand too. The code should work. Obviously, I'd go through pretty much like 10 or 15 more examples in different data sets before I send live data. And obviously, I do forward testing. But anyways, in general terms, code is good right now. So let's take a look at the results. Okay, the results are pretty much all over the place. Yes, okay, we made $9,000. Okay. When you look at the performance summary, oh my gosh, we're up $9,000 in this 4 months. There's 4 months of data here, or 6 months of data. But the thing is, if you look at the graph, I mean, there's some serious increases, some serious decreases. This is from positive $6,000 to negative $4,000. That's a negative $10,000 drop. Goes up, goes down, goes up. It seems to go in ruts too. This is trade. I mean, doesn't it? It seems to go in sequences. This is how many trades in a row that were positive. All these different trades in a row, each dot. So now going down, there's just monster moves down because $5,000 in one trade from here all the way down to the normal line. So let's just go ahead and change the risk reward quick. See what happens. The risk reward, we're going to change from 0.1 because that's risking 5,000 to make 10% of that, whatever it is. I don't know, $500. Yeah, that's true, right? $500. Let's do a 1-to-1. Now, I remember doing this. I've never tested this before. This is new to me. I remember just now looking that there's so many times where it hits end of day exit, and I don't want that. That's not the trade. I want to hit targets. Anyways, risking 5,000 to make 5,000. If it doesn't happen, I'm out at the end of the day. That yes, it's a less volatile situation. However, and we're still up 10 grand, 12 grand, whatever. This is not like a really good chart that I'd like to see, but because there's big drawdowns. And obviously the risk will be different. We'll probably put this on micros. Same thing. It's the same underlying data. So, and we can, so it's what is $5,000? We can be $500. It's really not fucking life or death, you know what I'm saying? But I wanted to put a big real number on there just to be able to switch contracts around because these contracts are very large. $2,000 in one risk box. I mean, I don't want to be risking. I want to be risking just about $5,000 a trade. The most accurate precise you can have your risk is the best. So it can't be 4,000, 3,500, 6,000. You know, all these different. These are big. No one trade is better than the other, especially in this strategy. So we want them to be as narrow as possible. So therefore, you need a little bit more risk per trade to be able to allocate contracts correctly to get that. Obviously, with micros, I could have probably done it. At this point, I actually don't know about commissions. There's only one. I mean, it's not the end of the world, but I think I can look at commissions quick. I just wanted to see what the commissions are. $3 per trade, per share per contract. So that's actually correct. I had it up for the last time. So it's actually correct. This is showing commissions included. That means we're seeing real results. And limit orders, we're seeing limit orders. And the market has to cross the limit order to be able to exit the trade. So this is real. Now, that's a 1-to-1. I still see a lot of end of day exits. There's so many end of day exits, and I think that dirties up the data set. So let's go ahead and change the risk reward to 0.5. So risking $5,000 to make $2,500. Now, I just want to see the win rate. I just want to pay attention to the win rate here. So win rate is about 51% win rate right now with a 1-to-1. 51% win rate. So let's go ahead and change it to 0.5 to 1. Risk reward 0.5. So let's see here. Recalculates. And we see a win rate of 60%. So actually not that much different. There's still quite a few end of day exits. End of day. And I just think that it's just not ideal. I mean, end of day exit is not my strategy. My strategy is just, it's a good stop loss, you know. So let's go ahead and actually save everything. And let's optimize. Instead of doing onesies, twosies, let's just go ahead and optimize this thing. I think it's ready for it. Risk reward, optimize, increment 0.5. Oh no, 0.25, please. Increments of 0.25. And I'll stop at maybe 2-to-1. If this pauses and breaks down, it might, because this is a lot of data for it to handle. So best of luck to you. It's a lot of computation. No way. It already worked? All right, let's take a look. Wow, that was quick. Okay. Much to my surprise, the higher risk reward trades worked much better. As you can see, the risk rewards on this left-hand side, I know it's small, but 2-to-1, the highest profit. With 51% of the times, it goes 2-to-1. I just find that hard to believe. Oh, there's plenty of end-of-day exits. Okay, that's why it's 51%. Not 51% hitting targets. I'm sure a 2-to-1 is most of the time end-of-day exit, but when it hits, it hits. And it won't lose. So I guess what we see here is a good spot to put our risk, because it's a 77% chance it won't break, and then just pretty much let no ceiling be there, and just let the thing roar if it wants to roar. That's what the optimizations is saying. Look at it. Okay, let's say in terms of net profit, which is what we're talking about, 2-to-1. first place, 1.75, 1.5, 1.25, and then the 0.25 to 1. So if you want to be right 80% of the time, you want that ego boost pretty much 80% of the time, and to be profitable, a 0.25 to 1 is the move. However, if you actually want profit and the best chance of winning, you're only going to win a coin toss at a time. You might lose $5,000, right? You might lose that. But sometimes it runs. You're going to make $10,000 in a day. Obviously, risk is probably $500. So let's say $1,000 in a day. But still, risking $500. So that's kind of what we see here. So this can tell us that, yeah, this is definitely a strategy that wants to run. And I would go so far as to say, no, I like end of day exits so you have each day's fresh, but I don't know. I'm caught between, I might want the 0.25, which is just consistent profit. You're gonna make $600, 80% of the time, or lose 5,000. That's true, yeah. But I think it's probably smartest, most wise to have a small risk on board, let's say $500, and a risk reward of 2 to 1. I'm sure if I put 3 to 1 here, it's probably that's the most profitable. You know what I'm saying? So whatever these big runners are, we want to probably get on board of those. So I'd say 2 to 1. Obviously, 2 to 1 is the most profitable. Let's just for shits and gigs, let's just take a look at what the price chart looks at that. That's a 2 to 1. Wow. Oh my gosh. That's really good. That's really, really good. 51% of the time. How many end of day exits we got? All right. Okay, let's count 20. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 of 20 are end of day exits. So about half the time it's just an arbitrary end of day, I'm out. So that's whether that's profit or not can actually seriously harm or not harm our trading system. And it just so happens that it's profitable most of the time. Look at these end of day exits. Winner, winner, winner. These are big winners. 9,200. It was almost to the target. End of day exit. This one about break even. These are mostly profitable end of day exits, but that's arbitrary, man. I just whatever. So 50% of the time that happens either way. You can't argue the graph. We have we know that the data's correct. This is the back test right there. So you can take a picture and then put a line down the middle right here at the end here, and then put it in live format or simulated, and you turn it on every day, and you kind of see, okay, it continues or not. You'll see the trend continue or not, and then at that point, it's just a simple, all right, we should put our money in it. And then also track it, where it goes. But all in all, that is a graph that I would love to be a part of. Look at that. That's awesome. And this is 6 months. This is 6 months, 80 trades, 6 months. 6 months. So with, okay, it goes down 20. So let's say minus is 0. So it goes down $2,000, but it goes up 7. That's pretty good. And the drawdowns are not very much. They're few and far between. Yeah, there's drawdowns everywhere, but they're not horrible as I saw before. So I like to see it. This is getting really long, but that's a session. I think that's a good strategy. Interesting to see. It definitely is interesting to see. So more to come on this. More to come. All right. See ya.